Hello everybody, and welcome to CNF Talks, which is a series of short interviews with speakers at forthcoming City and Financial global events. And today it's my pleasure to be speaking to Carlo Milia, who's the Director and Head of Market Abuse Investigation Unit at Consob, which is the Italian securities regulator. And Carlo is going to be speaking at our Market Abuse and Market Manipulation Summit on the 27th of February in London. Carlo, welcome.
Welcome, nice. Thank you for the invitation. I'm very proud to be here.
Excellent, we're delighted to have you. Turning to the first question, Carlo, would you mind explaining the background to the Italian regulator's powers in relation to market abuse enforcement? And are there any particular trends which you are seeing? And are they similar to other European jurisdictions?
Well, thank you, Maurice. Actually, Council was established in 1974, so right this year we celebrate our 50th anniversary as an important date.
Congratulations.
Thank you, Maurice. So Consob has all the powers that other NCAs, national competent authorities, have in Europe according to the market abuse regulation. So we have a set of powers, including the possibility of summoning people and having access to data and documents. And after the judicial authority authorization, we can even carry out an on-site inspection into private premises, and we can, of course, seize assets. And so it's a wide range of powers, and all in all, it seems to work in a sense. According to my notes, we sanctioned over the last 15 years, we sanctioned 400 entities. Wow. We related to 170 events. We administrative pecuniary sanction reached 130 million euros, and the confiscation 90 million euros, and even 250 years of accumulated temporary ban for people discharging managerial responsibility in firms or listed companies. So it seems to work the administrative side. At the same time, we have even the criminal side, where, of course, we rely on the priorities of the public prosecutors. Yeah. So as for the trends you asked me about relevant trends, and in this respect, I would highlight three points. The first refers to the general competition between public and private markets. So in Italy, as in other parts of the globe, you may see that many companies prefer to delist. Right this week, we had two cases with important companies, Saras and Tolls, received offer to delist. And therefore, regulators are aware of this phenomenon, and the European Commission and co-legislator are going to amend the MAR according to a package, a listing act, and that should be approved in a few months. And so there is a reduction in the burden for issuer. So we try to attract issuer in the public markets. Of course, this could create a problem because, of course, the barrier to entry for malicious people, of course, increase. So we have to strike a balance between the two trends. Initially, we had the wonderful experience of the AIM Italia, now is named EGM, and it is a junior market for small and medium enterprises, and the number of listed companies increased from 130 to more than 200 in just 5 years. And of course, so what is a bit bizarre is that the role of regulator in this framework is a bit different, because of course the market, I mean exchanges and the firms should work as gatekeepers in a company, small and medium enterprises into the public markets, and while the regulator is acting as exposed in case of violation, market abuse. And so when we detect something, we can enter with the sanction. And so it may look a bit disproportionate to see, for instance, an inspection in a company that has a value of just a couple of million euros in capitalization. And so the effort could look a bit disproportionate. While if you look at the wider picture, it makes sense. The second point refers to the block trading. That last month, the US SEC reached an agreement with the major US bank on possible misconduct related to block trading. They detected some form of front running, and this could couple a paper in the Journal of Finance a couple of years ago by DiMaggio, Franzoni, and others, who they detect a leakage of inside information within the firm from those who serve for fire sales. I mean, once the customer has to sell very quickly important stake. So this is, of course, price-sensitive information.
Yeah.
And so they detect a leakage of piece of information to other best customer of the same firm. So all in all, according to our experience, we see with favor the proposal of the European Commission, that is part of the mentioned Listing Act, to have a wider definition of front running that may involve other roles of person within the firm involved, not just those who serve the customer. Another trend that I think characterize the Italian market, but probably even not only, is the fact that 25% of those who abuse of their inside information, they make a profit, a very low profit, even 5,000 euros. So in the US, there is a paper by Aptal, Battacharia, and Marshall, who show that this phenomenon is again a bit funny, in the sense that these people incur in complicate their life just for a few thousand euros. And why do they do it? According to their analysis, there should be nothing of rational. It's probably behavioral, some hybrid company culture. So this is something that should be probably taken in a different way, not just by sanction.
Indeed. Okay. Well, thank you for that. I suppose, looking beyond purely domestic investigations, there's a need for international regulatory cooperation. How effective do you find this to be in terms of information sharing and collaboration with your colleagues across Europe?
Yeah, I feel that cooperation works pretty well in the EU and outside the EU. And after the tragedy of 9/11, almost any jurisdiction in the world is cooperate. Is ultimately just an issue of timing. Yes. Brexit, of course, created a number of problems, because essentially for one reason, I think, because as you may know, there is a so-called transaction reporting mechanism that allows the national authority to have an immediate understanding of the beneficial owners of a trade in the national market. So of course, being outside the EU, customer in England are not anymore into this transaction reporting mechanism. That it's very important mechanism, because just to give you the idea, this mechanism is in place since 2018, and if you look at data 5 years before 2018 and 5 years after 2018, the number of requests and offer of cooperation that Consul has with other NCAs around the globe is reduced from 70 cases per year to 40 cases per year. So the immediate picture of the beneficial owner and the full trading history of the way the person acts in the market is very important, even to reduce the suspect of the regulator, because when you have just one trade before the announcement of an information, it might look very suspicious, but if you look at the general history of the trades of the person, probably the suspicion reduces emphasis.
Well, perhaps there'll be a bit more of a rapprochement between the UK and EU when it comes to financial regulation. That things seem to be improving a little, don't they, on that front? Turning to our last question, The emerging technology, I suppose particularly AI, seem to help people on both sides. Obviously, perpetrators can be that much more sophisticated, but I guess regulators and firms can use the technology to combat market abuse as well. How do you see that balance playing out? Do you think it will lead to just more and more sophisticated crimes when it comes to market abuse, or do you think the regulators and firms will be able to detect it so much better, it will reduce it in the longer term?
Yes, AI is in the top of our agenda, and of course, AI may have so many applications and implications that are difficult to imagine. What the concrete risk that we perceive nowadays is the risk of fake news, and of course, so this call for a responsibility for all market participants, including journalists and of course listed companies, to react very fast in case of fake news. And while on the trading space, we are quite confident because electronic market allows us to be very ready to understand what is going on in the market, and therefore we can build on experience of 15 years in the HFT. You know, high frequency trading was an issue in the beginning of this century, so over the regulation, it seems quite effective. At the same time, in concert, we work with the academia. We produced 3 papers, the detection side with the Square Normale Superiority Pisa, and the UCL, the Professor Francesca Meadow served full-time in concert for 4 years, and Fabrizio Lillo. So according to this paper, we can machine learning can help regulators to detect insider trading market manipulation. I was personally involved in a paper on the legal side. We, with the other 2 colleagues of the research department, Gianfranco Trovatore, Tommaso Poli, and 2 Italian legal scholars, Fabrizio Consulich and Federico Consulich and Marco Maugelli. And we consider what the allocation of responsibility in case of misconduct by the algo. So what happens? And we even consider whether the definition of market abuse that is in the market abuse regulation are properly designed. And we finally suspect that probably we need some amendment because when at time market abuse regulation was written, the form of strong AI systems such as deep reinforcement learning were not in place. And so all in all, we feel that even the industry is a bit reluctant in applying these machine learning techniques because they could not be in a position to explain to the regulator the reason why they act in a certain, according to a certain pattern. We know the black box issue, and so could be even a barrier to the innovation. So probably we need to amend the definitions.
Very interesting. Very interesting observations there, Carlo. Well, sadly, we're out of time, but I very much hope that our viewers will be able to attend the Market Abuse and Market Manipulation Summit in London on the 27th of February. And thank you so much, Carlo, for sharing those thoughts with us today.
Thank you to you. Happy to see you in London.